Welcome everybody, this is Mike Hamilton from Trade the Easy Way. So a lot going on out there, a lot of geopolitics potentially really getting cranked up. So how is this affecting the markets and what should you be doing? Should you be hedging? If so, how do you hedge? Should you be selling? Should you be buying? So let's just take a look at what the impact of the market is. So this is the Chinese market. And Asia is obviously much more affected than the West, as it's happening in their lap. And so you can see we had a big drop here in October last year, and all we've done so far is come back down to that drop zone. So, so far we've bounced. Now, the last time we came down here, obviously we went and made a new high. So if China can hold down here and not close underneath this 14,300, then yeah, this could over time, as this pans out, wind up, and who knows, maybe even go and make new highs. If we now look at the Nasdaq is just pretty much sideways. If I just drag this down, so back here in October, mid-October 25, we were down here, broke underneath it, and then got cranked up from November into late January. So here we are. This is potentially a big bull flag. So don't get carried away with all the noise and the fear. Just concentrate on what the market is telling you. So obviously, if we close underneath this 24,000, I think I've been saying this for the last couple of videos anyway. Then we're done. Where we need to make a much deeper retracement. If you look at where we have come since April last year, it would be perfectly reasonable to come back to those November lows at least. And I think that's needed to get this market going. So I think we could see some deeper retracements. We've got monthly jobs end of this week, and a lot of UK results coming out this week now. So that's really getting busy. So anyway, in the meantime, this market is holding up. And if you look at the FTSE, all the FTSE's done is we've got 3 touches of this trend line, here, and this latest drop. And all we've done is come back to the 50-day average. So all the time a market sits on the 50-day average, this could be viable. And as with any market that we're looking at, if we start breaking this key support, start closing underneath this 50-day average, then this is a spent force, and then this could retrace back. If it really sells, it really capitulates, then we look at 9.5. Easy test of 10,000. If that doesn't hold, we're going to come and find 9.5. So one way of hedging stocks is if we get up here, if we bounce, so we come back to that breakdown area and then start closing lower again, you can short this with a stop above here. I'm guessing this is going to potentially recover to that breakdown area, but then if that fails, then you can short and hedge some of your stocks, assuming you want to keep some of your stocks or all your stocks. Okay, so that's one option you've got. The reason why I talk about the FTSE coming back to that drop zone is because markets don't normally just fall out of the sky. They don't normally sort of, just turn around and go. Normally, the most common pattern is to get a double top. So market sells, we get some fear in the markets, markets drift back up because all the bulls are used to coming back in again. If we return to that breakdown area and all the bears get hold of it, then that's the point where it could crack. So the danger is, well, we come back here and they just let go. They just capitulate, sell the heck out of it, and then we get a breakdown. So just be aware of that. Obviously that's gonna be out of the question if we start closing underneath here now anyway. but my best bet is we'll come back to resistance, maybe even a full boomerang, and then if the market's not happy by then we'll come down. This is the dollar. My theory about this war, about the way in which the US administration has acted, is that this has got much more to do. This war in Iran, or with Iran, has got much more to do with the US economy than people realise. And the reason is the US got nearly 40 trillion of debt, and 10 trillion of that has got to be refinanced this year. But because the bond market was bombing and dropping hard, yields were going up. So in other words, to service that nearly close to 40 trillion debt was about 38 trillion. To service that is very, very expensive if your bond market, if the debt market is diving, because the interest on bonds is divergent with the price of the bonds. So as the price come down, the bonds are more attractive if you hold them. And so I think with that refinancing happening this year, and of course you've got to also bear in mind that the US is a net exporter of oil. You know, it's a big producer of oil. So what's happening here at the moment? We've got the dollar coming up, we've got the bond market coming up, and we've got oil coming up. That is a massive plus for the US. So be careful when you think about what's going on in the geopolitics. This is not a sell-sell situation. This is potentially digging the US out of a hole. Just bear that in mind as you keep an eye on the markets and follow the markets. As I said in the Telegram room the other day, the biggest impact overall has got to be airlines, anything to do with travel. And you can see this is EasyJet. It looked as if it was holding up, looked as if it was going to go higher up until the point in which we started breaking down on Friday the 27th. So I think the markets seem to know this attack was coming. Lots of evidence that the markets on Friday were very rocky, and people were already bailing out stocks, and EasyJet was one to note as well. So we closed lower, just about clinging on Friday, and then 2 days of selling. So what can you do? Well, you can, assuming if you're in this stock and you got stopped out, then stay out. If you're in this stock and you're taking a lot of heat, then think about how much heat you're prepared to take. Because if we break this low here, we're coming down to 390, and if 390 doesn't hold, we are coming lower. And given that we've even got the threat of a lot of air traffic control strikes over the summer as well. So we're sitting on a key support ratio at the moment. So if we break that low, like I said, we're going to come down, and we could easily see 340 and 275 if this sell-off continues. All right. SSP Group, same story. So they have a lot of food outlets in airports, and so this is what I'm talking about in the markets. This is a nice double top. So quite a sell here. Retreat, boomerangs back to the breakdown area, and we sold again. So if we can't hold this 190, then SSP Group is potentially going to come down to 150 and lower, 135, 120. So at the very least, I would expect that to see 150, 160 at this stage. I'm not anticipating, there's huge sell volume here. I'm not anticipating this one holding short term. I'm happy to be proved wrong. If we start closing above £2, then this could be off back up to 210, 225 plus. But this is what you need to be watching out. It's the sectors that are most exposed that you need to be the most careful with. On the flip side of that, so I take that back, ignore what I said about the flip side, because moneysupermarket.com, MONY, had a nice climb up, so drops hard, climbs up, can't get through that 50-day average, and we're already starting to fall here. So there was decent volume on that pickup, but I just think we need, if this is going to survive up here, I think we could well see a double bottom here. One of the other thing to watch out for here is interest rates. A lot of the buoyancy, the upside in the markets, was to do with pricing in a rate cut. But if we've got commodities getting hit with a strong dollar, then I think we're going to see, if the dollar stays strong and continues higher, and commodities come off, then that is potentially good for the a rate cut. So that's something that could be something else on the plus side. So we just need to take this. We're very early into this situation. Nobody knows how long it's going to last. Doesn't matter what side your politics are. We've got to live with this and see the outcome. But in the meantime, we have got some healthy stocks coming to a lot of support. So far at the moment, the gold has pulled back on the strong dollar. We've got a lower high here. A very decent sell yesterday. Let me just enlarge this. So at the moment, we just pull back into a support zone. Just touch that 5,000 and we're $200 higher already. And so assuming we can start holding this 5,000 and 5,200, then I think we're going back to the highs and beyond. If the strong dollar continues, then this lower high could create a new lower low. But the golden rule is any instrument, any market that's above the 50-day average, and has been very trending well and retesting the 50-day average, is a buy at the point in which you hit that. So I would expect the dollar to see some lower levels here, but overall I think that is a buy. So it wasn't. So 48.55 was the place where we last launched from. So I think we'll at least see come under 4,900. But in the meantime, I would stay out of it at this stage and just see if we do drop further and then get bought up. I think for the moment, particularly with that large bearish day yesterday, that big drop yesterday, steer clear. See, last time we had a big drop on the 30th of Jan, we came into a much lower support before we picked up again. So I think that is what we're likely to see. In fact, I wouldn't mind betting that would potentially come down to 4,500. But see how we go. It's certainly very volatile out there, and you need to just protect your income, protect your capital, I should say, at this stage. You can see here is a good news story. This is IQE. I was in this last year and got stopped out because I got in about 9 or 10, I think. It came right down to 4 or 5, and then after many months there, at least, I think it could be 6 months, I can't remember now, pulled up, came up, held up, and then we're just broken up. So if you're not in this, steer clear for now. If you're in it, well done. Just be wary of they might pump and dump it. I'm only talking about 25p here. This is a loss-making IT manufacturer that has put itself up for sale. So if you're in it, pat yourself on the back. If you're not, I would steer clear. Right, let's just flick through the stocks we've been looking at. Shore Banking, yeah, that came down into 375. Talked about the potential for this to come lower, and lower it has done. So we launched up here in November 25, So this could be a good opportunity. If we close here and we see 380 or even 375, if you want to start to get back into this one, you're interested in this one, wait and see if the volume picks up, because the volume at the moment is too low for me. Wait until we close higher, wait and see, give it another day or two, see how we close the end of this week. Because of the volatility, I think caution is key. Rio, just moving sideways up there. Glencore, trying to climb higher. And Camel, huge drop. Again, this is an interesting one. God, we've come down so fast, up the stairs and down the elevator. That's the way the markets work, and that is very much what's happened here. So I could easily see that coming to 150. So again, I would wait for that to settle, but yeah, it's getting interesting. If that comes down to 150 and 160, then and volume steps in, I will be a buyer. Avon, a nice move off 1640, which I should have taken this. I saw this hitting a key support area and I didn't take it. So I'm hoping, this is in the defense industry, I'm hoping I get another shot at some of these lower numbers where we've broken out from. And let's just look at some US stock and then I'll finish up. We've got Microsoft coming off support. This is, I'm going to give this another couple of days, but we might well come and see 35, 37. We're under the 50-day average. We've fallen back down to this big breakup area from April. Yeah, I would like to see that Microsoft lower before I dip into that. And I want to see more volume coming in. So that's on my watch list. Amazon, looking for that to come lower. That's on my watch list. Netflix. Now, this is we've got all this action going on. Look at Netflix. Breaks the 80, comes down to 75, and then as soon as we break up, and this just powers up, and the volume is still in this. So if we get another test, we're 97, if we get another chance to get down the 80, if this has a bad hair day, and the markets get a bit spooked, and this comes down to 18 holds, I would add to this. So I'm liking Netflix. I'm quite surprised, this is my last stock I'll look at. Quite surprised at this one, BMNR. They own 80 billion of Ethereum and they have mining technology. So I bought this at 19.5 and here we are at 20.5. It saw 22 last week. But the volume is very interesting. I have to say, it's shaky. This is not, we couldn't hold 22, but as long as we keep holding 20, if we see 22 get and higher in the next few days, and particularly over the next week, then I think I would even add to that. In the meantime, yeah, if a bearish consolidation would be like this. We would pop up to reconnect with that 50-day average and then dive. What we need to happen is to open and close above the 22 and the 25 on volume. See the volume peak come up like we did here. And then we need to see that start to really climb and the buyers coming behind it as it climbs. If the bearish scenario happens, we creep up or even close that gap and close underneath it, watch out because this could really come tumbling. But at the moment I'm seeing this as some strength, the relative strength, as long as we can hold this and start climbing higher. All right, that's me done for now. So there's a lot going on, there's a lot of noise out there, but let's just keep close to what the markets are doing, where the buyers are, where the sellers are, and think about how to protect yourself. Cash is a position, so there's nothing wrong with going into cash for a while, sitting this out for a few days or maybe a few weeks, and then judging it. But yeah, don't be scared of just liquidating and sitting in cash, but just consider this market day by day at the moment and see where we go. All right, I hope that helps. More on this as we tick by. Bye for now.